Heidi ho, everyone, and welcome aboard. It is hump day. How did we get here so fast? I've got to be saying I'm pleased we are, to be absolutely honest with you. I'm looking forward to the end of the week. This daylight saving thing really takes its toll on me, I've got to say. And the reason is because I go to bed about 2 o'clock in the morning, get up at 6. It's just crazy stuff. And then I work all day no, I'm whinging, right? Stop whinging. What are we going to do? We're going to have a look at the pound very, very shortly. And I've got to change these numbers because we have now gone through the high. I think we've gone through that high. Yeah, we have. No, we haven't. It's still there, so that's still relevant. But it will change if we just tip out this high, which it looks like we may well do. Before we get on to that, let's take a look and see what's happening today. And hopefully you guys can now see. I never know which chart this is showing. Can now see the Forex Factory on my screen, but I am looking at YouTube. Oh yeah, there we go. Bingo. We're on a 10-second delay here. That's why it takes me a little bit of time just to catch up. Rightio. Yeah. Thanks, Gary. you make my day, mate. Right. What have we got? Yesterday, we had all those sorts of things happening. Let me update this. I don't think I'm up to speed, frankly. Not that it really matters because nothing has happened today, apart from, of course, the Chinese are on day 3 of their bank holidays. And we heard from the Bank of Japan's governor, Mr. Kuroda, earlier. Well, some of us did. I didn't. Wasn't me. I wasn't there. And we, of course, have Lagarde speaking again today. But the headline event of this hump day is, of course, the FOMC meeting minutes, which will be semaphore at around 7 p.m. British Greenwich Mean Time, British time, London time, whatever it is. UTC as well, all of those things. So for FOMC minutes, I think we've had a lot of speeches going on in the past week or so. In particular, we've heard from Jeremy Powell quite a bit, and I think there's also been, well, there you go. There's Kaplan speaking, Powell spoken yesterday. There's been all sorts of speeches all over the place from the Fed members, chairman in particular, but certainly from the board as well. So my thought process there is, what more can they say? Although sometimes the devil is indeed in the detail, and that, of course, is what the meeting minutes will reveal at 7 p.m. 7 p.m. I won't be awake, will I? No, not even close. That's like, it's way after 2 o'clock. What time is that my time? I think that's 4 in the morning. Whew. Yeah, I'll be asleep hopefully by then. So that's pretty much it. It's a pretty dull old day, I would have thought, from a news perspective. But of course, overnight, guess what happened? Donald intervened yet again. So coronavirus has had a massive effect on him, obviously. And we have had a bit of a turbulent time this morning. We'll get to that very, very shortly. Okay, so now we've got 29.10 as our high. We'll go to 29.11 on this one as our entry. Our stop loss is 28.91, so we've got a perfect 20 pips. At this point, we've still got a minute to go. If that's going to be the case, then our TP1 will be 29.21. And our TP2, which of course is half of the risk in terms of pips. If the risk is 20, our TP1 is 10. TP2, if our risk is 20, our TP2 is 40. So 40 onto 11 makes that 51, does it not? It does, certainly in my book. 29.51. Okay, so we can set those now. And those are your operating parameters. So I'll put the buy in first as it is closest the mark, and the buy is 29.11. And the stop loss is 28.91. 28.91 is right. Yep. 1.289. I get that right. 1.2891. Righto. That one's sorted. So we're trading. Oh, no, it's not. We're trading straight in with an untested daily pivot. We won't be taking that trade at all, guys. Cancel it. My apologies. I'm half asleep here. Been a long day. We've got to cancel that, guys. We are not taking the long. Delete. We are not trading into a daily pivot untested with nothing in the bank. So the only option here today will be short, and we'll see if that works. 28.82. It was okay before, but it's not anymore. 28.82, which is there-ish. Our risk is what? 8 pips. So our take profit's 4. That's fine. No drama with that one. So that one we can place. It is a sell order, a sell stop order. I was still talking, your chat disappeared, Helen. Oh. 28.82. And stop loss, 28.90. And that is all we need to do. Okay, so I think we can probably relax for a little bit until we get triggered down here. All right, g'day guys. G'day Gary. Hi Abigail. Message deleted. And Abigail again, message deleted. Were you swearing at me, Abigail? It's lovely to have you on board. Welcome. And hi Helen. I was still talking and my chat disappeared on YouTube. I don't know what that means. Hi Ryan, how you doing? Hi Swee. Hi all to you too, Shukri. Hi Paresh. Lovely to have you all in the room. Let's see if we can find something to not amuse ourselves, but to get into the market. Okay, there are a few new people in the market, so let me explain this trade to you. Essentially what it is, it's something that we place every day, Monday through Thursday in this show, and it is trying to get the breakout of the last 3 1-hour bars. So this one, and this one, prior to London session. So the way we tackle that, and we've got various means of doing that. At the moment, the procedure that we're adopting is to trade the bar. So if this is the high of the range, which it is, of course, the range of the last 3 bars, if that's the high, we enter above that candle and we take our profit, our first profit, with half of the risk candle. So for instance, today, what we were looking at up here, you can see the levels. The entry was going to be 1.2911, and the stop loss was going to be 1.2891. Of course, that gives us 20 pips of risk that we're taking into that position. And what we then need to do is take profit at 10 pips. So 10 pips today would have been right there at 129.21. Now, because we are conservative people and don't like to do things that are most... Oh, okay, Helen, gotcha. We don't like to do dangerous things. And one of the most dangerous things that you can do, or that I believe you can do, as an intraday trader trading on small time frames with tight stop losses, is to trade into the daily pivot without taking profit. We would probably only have about 3 pips of profit. What's happening now? if we did take profit at the daily pivot. So that's not an option on a risk of 20. So therefore, we're not taking the long at all. If it goes, it goes. So be it. But that's one of my rules. We don't trade into an untested daily pivot without having banked. So we're only trading the bottom range, or the bottom of the range, which is the low of this candle here, and we put our stop loss above that candle. So this is a very small candle in the scheme of things, and it is only representing an 8 pip risk top to bottom of that bar. So what we will do, providing, in fact, what we'll probably do now is cancel it, because the long would have been triggered. So I don't think we've got a trade today, guys, but this is how it works anyway. I'll explain it to you. We would enter at the low of that bar, or rounded down to the nearest whole number, stop loss above it, and once again we would take our profit at half of the risk candle. In this case, it would be 4 pips. We take half off the table, move our stops 4 pips from entry, and let the rest rip till TP2, which is double our risk. In this case today, that would have been 1.2858, which is around about there somewhere. So at that point, you take your second profit, which is an optional. You could take half off, half of your remaining half off, and move your stops to entry. That's not optional. You have to move your stops to entry at TP2, but you can take money off if you want, bank again, or you can just let it ride. Entirely up to you how you want to manage that, how you want to micromanage it. So the rule, of course, being that once the long is triggered, we cancel the short, and once the short is triggered, we cancel the long. So in this case, because the long would have been triggered had we placed it, it's now time to cancel the short. So that was a waste of time and effort, wasn't it, really, at the end of the day? I won't change that to no trade, but as I said, if this just bursts through here, then so be it. We don't want to take that added risk. There's already risk in the market. Speaking of which, I did a thing last night. Traded dollar yen again. What a goose I am. When will I ever learn that dollar yen and me don't get on? G'day, Ryan. I am new. This is my first time watching. Ha. Really? Haven't I seen you in the room before, Ryan? I've seen another Ryan in the room, that's for sure. Anyway, welcome, mate. Great to have you on board. Normally, we would have Ash along beside me at this time, but one of us has the Wednesday off, and this week it's Ash's turn. I should be joined in the not too distant future, I hope, by our guest presenter today, who is the Big O. No, not Roy Orbison, because he's dead, but Orlando, who's a bit of a swing trader and keeps his eye very, very closely on the markets. I haven't seen a message from him, so I'm assuming he will be in the not too distant future. And if that's the case, then we'll have a good old chat to him about what his thoughts are, in particular, with this little number, which I'm going to show you now, which is the dollar index. Now, hopefully that will appear on my screen very soon. Sometimes it does, sometimes it doesn't. Ready, set, go. There it is. Okay, there's the dollar index, and we're looking at the 30-minute chart. We don't really want to look at the 30-minute chart. We want to look at the daily chart. So let's do that. This gives me a very, very strong idea as to what may or may not happen throughout the day. And it's not giving me any idea at all what it is. It's giving me the idea that if price were to come back to this level, we're in a pretty strong reversal position. Reversal from that rally, rather, sorry. Let me show you why I like that. Gee, it's not quite there. It's nearly there. It's close as damned, I reckon. Okay, those of you who know how I trade will know what I'm looking for here, but gee whiz. If I wasn't in the trade, I'd probably trade it. So I'll tell you what the trade is shortly, but you can see what's happened here. This is the daily chart, as I said before, and we went into consolidation having come off this confluence area around about the 194.75 mark, as it is there on your chart. Then we came back to the top of this range that we had broken out of in pretty quick fashion. You know, we're up 3 days or 4 days, down 3 days or 4 days, and then we went into that consolidation, broke it on Monday to the downside, including the trend line, broke below the trend line. And then yesterday, I think courtesy of Donald Trump, when he, which is kind of crazy, and I'm no fundamentalist, no economist, I keep saying that to you guys, and it's very, very true. I've got absolutely no expertise in the area. I'm a technical chartist, full stop, that's it. But you have to notice what's going on. And of course, what Trump has done since he got out of hospital is put a bee in the nest, or a beehive in the White House. And yesterday or overnight, he apparently told his cronies, aka the government bods who do his bargaining for him, to stop negotiating with the Democrats over fiscal policy, in particular fiscal easing. Now, this has done a few things to the market. Some of them you would make sense of, others you would not. But what it does appear to have done is gone into a risk-off situation. Now, when that's the case, you'll find that things like the yen will weaken, and to some degree, things like the dollar will, risk on the situation, you will see the yen weaken, and a risk off situation, you'll see the yen strengthen. So I think we're going one day on, one day off. It's like Mr. Miyagi, you know, wax on, wax off. And I think Trump has done both in the space of a day. It's not unusual for Trump. He can make the market move like no other person, frankly, and he doesn't even have to leave his pajamas, get out of his pajamas to do it, which is kind of weird. We've never seen this before, but, well, we've seen it for the last 4 years. There's no question there. So that's why primarily I've been steering clear of the dollar pairs, because who knows what happens next. And of course, it happens at the very worst moment, as it did with me on dollar yen this morning. I'll go to that in just a tick. I think we're still in the trade, but it doesn't look flash. So when I look at this chart, long story short, or is it a short story long, probably, we've had that bounce back to that level, which just failed to hit the 95 mark, which is where I thought we might be having a little bounce. But certainly we've come off that downtrend line, hit the support trend line, broke it, and then, of course, as I say, yesterday retested it. Very, very late, I think that happened. So what do we think now? Well, as I said before, this is now setting up for me as a false break of not only this trade line, but also that level that we spoke of. It's the breakout level, right? Which is that blue line, which is around about 93.76, as I see it. We've now come back underneath that and retested it, as we have the support trend line and the resistance trade line. That really does, to me, spell, if we get back here again, we're going at least to here, and perhaps to here, and perhaps even further. So I'm a bear. I can't trade this long at the moment. I have no real wish to anyway. But I see this as a potential, guys. If you're not in this short already, and perhaps hopefully you're not, because it's still precarious. I think if you wanted to put your stop loss above the 94 handle, around about that mark, 94.06 maybe, and maybe put an entry at 93.30, if you can trade the dollar index, that is, then I don't think that's the worst thing you could possibly do. Of course, a lot of us can't trade the dollar index, so we'll have to go back to the charts and see what we can trade as a dollar bear. Let me go to that dollar yen trade to start with, if I can actually find it. Oh, by the way, I do have an order dollar Swissy if you're interested in that. We're selling the dollar Swissy at 91.33, so 0.9133. That's kind of a proxy to what I was just talking about. So that's why I'm letting you in on that. This is one that I took with my Trader Talk radio group this morning. And we're looking to trade this bar exactly the same as we're looking to trade pretty much on the dollar index. So it's a proxy for it at the end of the day. So 0.9133 is the entry. Stop loss is at 0.9207. And TP1 is at 0.9083. Now, those of you who are new into the show, I have to give you a few parameters around how we manage these trades. So at TP1, if we're on a daily chart or a 4-hour chart, we generally take 1/3 of the position off at TP1, which today happens to be here. So we would enter here. Our first take profit is here. We take 1/3 off at that point, leave our stops where they are, and then we start looking for a TP2. Now, TP2 is probably, if you want to be conservative, what's our risk? 70 pips. You don't quite get 2 to 1 to here, but I would take it. I would definitely take TP2 there. So that would be your TP2. You can do one of two things again. Take 1/3 off, which I would do, and move my stops to entry. So no matter what happens at that point, you've got money in the bank, which can't be removed from your little account or your big account, as the case may be. Then we would let the rest run. And the rest running, to me, looks pretty clear that this level here is one that I wouldn't want to trade through. So that'd be an all out there at 87.06. That'll do. 87.06 would be my target for this particular trade. That is dollar Swissy. So going back to the one that we took this morning, exactly the same trade. Yesterday, overnight, wherever you are. We took it in last night's US session. And it was this one. We entered the market at 105.50. Now, we were nowhere near entry when I went to bed, but then along came Donald and produced that candle for us. Very, very nice of him. What a prick. Oh, I'm sorry, Donald. Sure, it won't get back to him. Anyway, he put us in the SH1T, as it were. Not so much by the movement off the daily pivot, that's fine. But what he did do is he took away our insurance, which of course is that bar there that we traded. And for that, I do not thank him. Are we still in the game? Of course we're still in the game. We've got a double top here and potentially a lower high. Would I prefer to be down here? Oh yeah, that would be far better. There's no question about that. But there's not a lot you can do. This happens while you're asleep and while the President of the United States is not asleep and doing dreadful things to the market. And that's what he's done. So he's actually turned this around. And as I said, that's fine if he does it from here. But to take us in on it's not fake news. I try to play him at his own game and I lose every time. It's crazy. Dollar yen, I find it very, very difficult pair to trade. There's no question. What have we got in the questions box? Speaking of questions, the Donald strikes again. Yeah, he got me again, mate. Well, he hasn't completely got me yet, but he's got me in a bad posse. What Eddie Van Halen left sorry, what Eddie Van Halen left Earth? RBG2. RBG. That's a song, right? Van Halen, RBG. You'll have to spell it out for me, Helen. Sorry. Oh, Jump. You got to jump. That's right. I can't sing Jump. Hasn't got a jump. Everyone jump. Yeah. It hasn't really got a melody to it. Ruth Bader Ginsburg. Of course. Thank you. Now he's replaced her, has he not? Or has this? Is that what that's about? Okay, maybe this is a little bargaining tool, so that the Senate passes his preferred replacement for Ruth Bader Ginsburg. Okay, is that what you're suggesting? Maybe. Look, way above my pay grade. I've got to say, way above my pay grade. So I'm not qualified to comment. With the Donald spoiling our trades, might as well jump. Got it. Thank you. Look, to be fair, he did us. We did me a favor on another cross, so I can't really complain. And that was, and I should apologize to those of you in the US session last night, because when I closed the US session, as is my normal procedure, I went downstairs and grabbed a glass of port. And because it takes me a little while to wind down, it's a bit difficult to jump into bed and at 1:30 in the morning when you haven't had a glass. Well, you can actually do it without the port, but when you've been chatting for half the night, it's a nice way to wind down. And I was just flicking through the charts, and I had a little inkling that the yen was going to rally a little bit. So I thought we would be going risk off. And that means to me that things like the Aussie and the Kiwi and the CAD are all going to have a hard time of it, and in general against the yen. So we then saw this setup, which I had missed. Well, I thought I'd missed it. I hadn't even looked at the chart, but this was looking very, very nice and this is the same thing as we're playing at the moment, right, on dollar Swissy. It is a break of the monthly pivot, of the resistance trend line, and then a break back below, then a retest of both. Not only that, but the daily pivot of yesterday as well. So I had very little choice but to place an order below that bar there with my stop loss up here. Haven't got it on this chart, but on my personal account, I have done that. So I apologize to you guys. I should have spotted that during the US session last night. And I've got to say that Donald did this. So Donald giveth and Donald taketh away, all in the one breath. And that's what happened. Now, I think this has got potential, this trade, frankly. I owe you a kava, Shukri. Yeah, okay, no problem. If we ever get to Fiji to do a barley, no, we don't do barley trading retreats in Fiji. But if we did a trading retreat in Fiji, look, more than happy. And I can track some down. I know how to do that in Fiji because we have contacts. Righto, so where are we at with this? If you're not in it, then it's probably of very little use to you, but I see this area here as a potential entry if you are not in this trade. Why? Because it'll be a retest of the breakout. It'll be a retest of this trade line. It'll be a retest of the daily, well, it'll be a test of the daily pivot. And if we even get back up to here, it'll be a lovely bounce off a confluence area. So I think this may well have legs. It will depend on Donald's mood in the morning, I guess, as to whether he changes his tack and calls everything off, or who knows. That's Donald. So Kiwi yen is one that I'm in and going okay. Pound. Well, we could have got our TP1, guys, which means we would have had a break-even trade at worst, but those are the rules that I use. So I have no qualms about saying if it goes to here, we missed it, but we missed it for the right reason. So don't get your knickers in a knot about that. That's, if you do that 100 times, I think you'll find that 95 times out of, or at least 90 times out of 100, you're going to thank yourself for doing it. So let's move on and see what else is going on around the place. Today, watch this today, apart from Kiwi yen and dollar Swissy, I went back to the three that I had on Monday. Sorry, Tuesday. What's today? Wednesday. The three that I had on Tuesday. And these were they. Aussie Kiwi was one. And we were looking to trade Aussie Kiwi short, right, as a bounce off the monthly pivot and also the top of our descending channel. So we got little rabbit's ears here, and that looked very, very nice. Came down to a support level, which was the weekly pivot of last week, and then bounced straight up to the monthly pivot and then straight back down to exactly where it came from. Well, guess what we're doing now? We're doing exactly the same thing. What do we call that? We call that consolidation. How do we deal with that? Well, we put a ring around it. That's what we do. And then we look to trade it. So that's exactly what I'll be looking to do. I don't need a rectangle here. I can see very clearly that we're in a range, but I'll put it in for you. And it's really not my, it's not the thing that I need to trade with here or from here. What it actually is just confirmation of what I'm about to show you. So that's probably our range there. And what I'm really looking for here is not to trade off the top of the range, but if it gets through there, then I will absolutely do that. I'm just showing you to point out that we are in a range here without question. Well, in my book, without question. So what I need to look for here is two things, really, one of two things. I want confirmation that this double hit at this level is indeed the boss cocky here, and it's going to shape the market. We kind of got that in the lower high, which to my mind, and we looked at this yesterday, and I said, oh, can't trade that because we'll be trading straight into an untested daily pivot. And of course, it made a liar out. Well, it didn't make a liar out of me. It just makes a mug of you when you say that. And of course, it goes bang straight down to the bottom of your range, which is where you wanted to get profit from anyway. And we're doing exactly the same thing again here, but no higher low. So for those of you who don't know how we trade the ranges, we're looking for bounces off the bottom and higher lows to trade long, or we're looking for bounces off the top and lower highs to trade short. But that's not my preferred option here. My preferred option is to trade a false break of this line here. So what that looks like, and again, I think it's probably the number one thing that I'm trading at the moment is false breaks. And I don't think there's anything to be concerned with about that. There's something to notice about it. And that something, in my mind, is we're not getting any follow through. And by that, I mean the trends, well, certainly the pairs that I'm trading, the trends are not changing. In other words, we're not getting reversals, which is what I really like to see. We look to trade reversals every single day, whether it's off the top of the range, off the bottom of a range, as a result of the end of a run, the end of a rally, the end of a trend. We're looking to play that every single day. So what I'm looking for here is a false break. So I'd love to see price get back up to here and reject the monthly pivot for the first, second, third time, get back underneath the trend line, which of course is the top of our channel, and give me a retest of that. And then I see this as a short. Now, of course, we don't trade through the bottom of our range without taking profit. So that would be a must. You need to take profit there. Probably even get yourself safe in the market. So it depends on what time frame you actually get into this on, if you are afforded that luxury, of course. If it was a 1 hour chart, then take half off and move your stops to a safe place. But I think even if it's a 4-hour trade or even a daily trade, I'd want to be taking either one. If I took a third off here, I'd move my stops to entry just so I can't lose, because the chances of this bouncing and going back to the top of the range, of course, are extremely high. And that's the way we do it. So, yep, pretty clear what I'm looking for. I'm looking for this, this, and this. And if I see that, I'd put my entry there, and I'd take profit here, and I'd take profit here, and I'd probably let the rest rip to see if we do indeed get what I'm after in the first place, which is trading to the bottom of the range. No, not this range, but this range, this one here. Now, those of you who are joining me for the first time will think, what on earth is he talking about? A range only goes from one horizontal level to another. No, it doesn't. That's bullshit. A range, to my mind, is created when we've got a series of highs that are, and it's hard to use the right word here, in my mind, equal value. No, equal in terms of we have a straight line that we can draw between those highs. In other words, a trend line, right? Now, if we've got on the other side of that something that's parallel, and we're going from the top, sorry, that's a bottom, from the bottom to the top, and then back to the bottom, and then back to the top, what am I looking for? I'm looking for the bottom again, aren't I? Because isn't that what ranges do? Of course it is. So don't think that ranges are purely rectangular or horizontal. To me, that's a range. And whilst ever we're getting that even spread, if you like, well, bounce off the bottom, bounce off the top, bounce off the bottom, bounce off the top, why would I expect anything to be different? Why is now the time that this breaks out and changes that sequence? I don't know. Got no idea whether it's going to break out or not. And that's why I'm not trading now. That's why I'm not saying, okay, enter the market here. We've got to have a reason to enter the market, and we've got to have a reason to believe that price is indeed going to bounce off the top of that channel. And the reason comes when, well, one of two things. It fails to close above the channel, and the other is it does close above the channel, but then closes back below the channel. And this can happen on any time frame, right? The longer, the stronger, as always, but that can happen on any time frame. So they're the two things that I'm always looking for. You know, this is a daily occurrence. This is my daily bread, if you like. That's how I do it. By looking at range breaks, which, believe it or not, are very, very highly proportionate to be false, fake outs. Far more prevalent than false breaks, which are far more prevalent than actual breakouts. So if I know that, if my brain is switched on and knows that most breakouts are false, why would I not want to take advantage of that? And that's what my strategy is very much most of the time, always looking for false breaks. And when we're in a market such as this, they occur very, very, very often. There's one there, right? Back, short there. You get all that. Juicy, juicy, juicy. Of course, as always, you have to be in the right place at the right time. But when you're talking a daily chart, you've probably got far more options available to you than in terms of not frequency, but in terms of surety because it looks far, far clearer on a daily chart than it does on the 30-minute chart. But it's always the same thing, you know. I told you that was a long story short. EuroCAD. EuroCAD was another that we're looking at. Let's take a look and see how that looks today. They do it every day, don't they? Dipsticks. Oh, they're probably nice people, but no. Did I say EuroCAD? Yes. Now, those of you who've been with me for quite some time will recognize, when did we do this? Do we trade this again? No. No, we cancelled the order. Right. Okay, got it. Okay, there's a message from Ash. Those of you who trade the S&P, I've got a trade for you. Okay, I'll broadcast that and then come back to mine. Here it comes. Let me find the numbers for you. Give me a tick and I'll just answer him. Okay, so Ash is shorting the S&P. Let me see if I can find an S&P chart. This is not one of my things, right? Okay, I'll have to create one. S&P 500. Where are you? Ah, there it is. Oh, I didn't want to do that. Okay, never mind. I'll go back to that. So the level is 33.87. So he's already in 33.87, which is right about there. But you're very, very close to that number. So if you wanted to take this trade, Ash has gone short at 33.87. And his stop, I'll put it up here. No, I won't. I'll get confused when I... That's no longer valid. I can put it up here. Okay. Right. So label for S&P 500. We have got, I've got no idea what chart he's on, so I won't even put that there. But it is a sell at 33.87. Is that what I said? Yep. His stop loss is 34.17. Has he got a TP1? Yes, he does. TP1 is... what do we got? 33.47. There you go. Happy days. Righto, guys, those of you who want to follow Ash's trade, there it is. It's on the S&P 500 and it is a sell order at 3387. I'll place it on here, shall I, just so we can follow it. Will I go in at market? I think I'll go in at market so that we are in the market. New order. That's not a pen. That's not a market order, you idiot. All right, sell by market. Stop loss will be... I've never done this before. I never enter the market at market 3417. Get rid of that. Bang, bang, bang. And why is it not letting me do that? Because I'm on this silly account. Toy account, that's why. Okay. Sell at market. All right, we're in. So 33.87 TP1, I'm going to mark that, which is at 33.47, which is below the weekly pivots, just before the lows there. Okay, so we'll keep our eye on that one. If you are putting that as a market entry, then you're in the market. If not, put it as a limit entry short, and you aren't in the market at this point in time. All right, it appears Orlando's got lost. Hang on, I'll just see if he's about the place. And then I'll go around the grounds, or continue our little wander around the grounds and see what we can find. Any questions? Oh, sorry, I've been away from the chat box there, haven't I? Could show us your entry for dollar Swissy and Kiwi yen again? Sure can, Sino. And I've got the Carver on tap in Fiji, Shukriya, all good. Righto, dollar Swissy. Dollar Swissy. Okay, Orlando will be in a tick. Righto, dollar Swissy is on a daily chart. Hang on, he just wants an answer. Okay, so the deal is this. Dollar Swissy, they're the levels, but I'll show you why. And the reason is, even if you go to the big picture here, right, where we've got a very, very strong support level underneath us, which is this dashed line right here, right? We've got strong support here. We've had resistance here. We broke the resistance here, came back, and it was support again. It was support again. And now we have broken that support level and we've retested that support level. So my contention is this. Of course, we're still in a downtrend without question, but the break and retest is always interesting for me. And the reason it's interesting for me is because it provides me with two things. It provides me with, number one, the signal or suggestion, if you like, probably the best way to put it, that the buyers are still about. And it also gives me that failure point. And what I mean by that, the failure point for the bulls, right, is here, right there. Because if they're long, they're wrong here. That's the whole point of that. But what that does at the very same time, that bar, by trading that bar, it gives me insurance that if they are in fact gaining control, then the chances are price is just going to keep going up off the top of that bar. Because if, let's say, the rest of the market supposes that, okay, we've got a base formed here, left shoulder, head, right shoulder, and this potentially is a higher low, which is something that I'm always looking to trade, right? But not if it's a buyer bar. And the reason for that is as I'm explaining to you now. If the buyers are indeed in control, the market should just continue going off the top of that bar, because traders see that, they see that move, and they go, I've got to join in. I've got to get in on this. This is my first attempt to get this reversal right. But what it does for me, it tells me that if that's not the case, then something else is happening, and that something else will start to gain momentum around about here, where all these dudes are wrong. And that's where I want to be. I want to be where the rest of the market is wrong. And that is at that point right there. And the way I spot that is by, again, it's the same thing every day. I'm looking for a false break. So the false break on this occasion is this trend line here, or trade line. It's not a trend line. It's one of my trade lines where we've broken it. We've come back below it and we've retested it. So really what's happening here is that the battle between the bulls and the bears is taking place on the monthly pivot. And the winner here gets the spoils. So if the bears win, as is momentum, then in my opinion, they're going to here in the first instance and maybe shorter in the second instance. And that's why I want to be safe in the market when I get to here. So I hope that helps you. And this is one of my favorite plays, double cross of the monthly pivot anyway. So
Hey, mate, how are you?
Hello, buddy. What's doing?
I'm fine, thank you. Well, finally.
No, I didn't ask you how you were. I said, what's doing?
Excuse me?
I'm pulling your leg.
Me too, mate.
This is the Big O, ladies and gentlemen, by the way. And so those of you who are not aware, there's a few people in the room today I haven't had in the room before, mate. So I just thought I'd give you a little bit of introduction.
Okay, cool.
Are you normally asleep at this time? What time is it?
Well, right now it's 1:46 a.m. I was just chilling around watching watching a movie and drinking some tea, mate. I'm usually up at around 2:30 a.m. But I had some stuff to do to take care of earlier. So yeah, but I'm usually up at this hour.
Right. If you haven't told by the worked it out by the accent, guys, Orlando lives in a strange part of the world called, where are you, mate?
I am in Central America.
No, specifically.
El Salvador.
El Salvador. So that's why he sounds like he's drunk every day, because
I do, mate. I mean, I've been told that before, that I sound like I've been drinking all day long, but I know it's just the accent, I guess.
It is indeed, mate. I'm going to come to you in just a tick.
Go ahead, mate.
Because I'm just explaining a couple of things.
Cool.
Before I come to you. So that's dollar Swissy. That should be pretty clear to you now, so I know why I'm looking to trade that short. It's not a prediction. It is simply a cause and effect. And if the cause is that the bears are actually going to take over, they're going to take over here, in my humble opinion. The effect will be they'll drive it down to here. And if I'm wrong, hopefully I'm wrong here. And it happens that they drive the market long and we don't get involved. Kiwi yen was the other one. Now, the reason I took this short was exactly the same scenario, What we had was trade line coming through here, doubles up as a trend line as well, this one. And we had a break of that, which turned out to be false. How do I know that? Because we broke the trend line or trade line. We came back below the trade line, and then we retested at the trade line with this one. So that exactly the same trade as I just showed you on dollar Swissy is always going to be the same for me. The bulls are wrong at this point here. They got it wrong. And we get it right when it comes through that point. The trick, of course, is finding out where you get safe in the market. And that has to be that level there, which is where we took our first profit, right? So what now? Well, we're retesting that level again. If we were to come back above there and then retest it, we're doing exactly the same thing in reverse. So we could have false break false break to the high side, followed by a false break to the low side. That is not uncommon. And it looks like we may well be going into a range. I'm hoping that's not the case because I'm still in this trade and I want some more profit out of it. Not much I can do right now, but if it does close above here, then I probably think my stops might close up from where they are now, which is still above this level. So I hope that helps, mates, and should give you a clear picture of what I'm trying to achieve here. Okie doke. Best drinks. S&P trade, stop loss to entry is only 30 pips, but the broker spread is 100. Sina, you're speaking a different language to me. Let me have a look at that. The broker spread is 100. Is this the truth? Where have I got that? Here. Okay, so you're still at around about break even on that. Okay, let me have a look at, I can't look at that. What I can look at is this. The broker spread is 100. Okay, I see what you're saying. And the TP1, 3387 to 3347. So what you're saying is the spread's actually, in my book, because I don't trade this, I've got no idea how it works, but I'm seeing 338348 to 338378, which to my mind is about 30. Now, how do you count that? That's 30 cents, is it? Big O, you trade the S&P. How does this work, mate?
So yeah, I do trade the S&P. What's the issue that we've been asking? That we have.
Okay, so we've got an order in the market from Ash, right? He's selling at 33.87. His stop loss is 34.17, which to my mind, if it was a currency pair, I'd say, okay, that's 40 pips or 30 pips. Sorry. Now,
but no,
it's not. What is it?
All right, so the S&P depends on the broker, right? The S&P futures, each pip or tick is a 25-cent move. With the IFS markets, let me just give you this one right here. So let's say,
have you got the power? Yes, you do. Yeah, you've got the power.
Yeah.
Just show your chart. Yeah.
Yeah. All right. I'll share my screen. Hold on. Oh boy. Yep. All right. So this is the S&P 500, and let's go to a 1-minute chart so we can actually see this. So we're going to be looking from this low to the highs, right? So that's a 33.81. To 33.86. That's a 50 pip. That's a 50 pip move. So this particular broker, hold on, let me just hide my trades. That particular broker, so it's so that's 561. That's a 10-cent move. So this particular broker, each pip is 10 cents. On the S&P 500.
Okay, so what Sino is saying is the S&P trade that we're in, stop loss to entry is only 30 pips.
No, how much is the stop loss to entry in dollars?
$30 as I see it.
So that's a 30 pip. Yeah, 30 pip stop loss.
Right, yet he's saying the broker's spread is 100. Can't be right, can it?
No, that's 10. Let's if the brokerage spread says 100, that's 100 pipettes. You know, just subtract. I mean, just eliminate 1 0. It's a 10 pip. It's a 10 pip spread that you have right now on the S&P 500, mate.
Okay, cool.
Yeah.
Does that work for you, Sino? You got that sorted? Or have you really got a broker who's got 100 pip spread? That would be pretty ordinary.
Yeah. Big move on the yen right now.
Yeah, don't say that.
Yeah, I got stopped out on this on a small loss here on
it looks like I have been as well.
On a US dollar Japanese yen short that I had going on.
You too.
But yeah, you too?
Yep.
Well, good days, mate. At least I'm not alone.
That makes you feel better, does it?
Yeah, it does. Yeah, but it is definitely a yen move because the US dollar right now, the DXY is moving lower from the, is this the daily highs? Why don't we add some indicators to see this? Yeah, from the daily highs, we're making new daily lows. Of course, that, I mean, the good thing about, I mean, and this is one of the reasons that I'm awake at this hour, you know, because of yesterday's move in the market. We got that big push to the upside on the US dollar because of Donald Trump saying that he was ending all new coronavirus relief negotiations with the Democrats, right? So that's good for the US dollar. Why? Because we are going to, I mean, if there's no relief bill, there's not going to be stimulus. So there's not going to be extra dollars in the market, which means that one single unit is going to be more valuable without that influx or flush of cash into the economy, right? So that was, I mean, that's why we had that reaction. And of course, the markets reacted the opposite way. Let's look at it here. The opposite way, let's go to the 4-hour chart, the 1-hour chart. The opposite way, so yeah, we had a big bad day on the S&P 500 and a big, well, it is a big bad day on the NASDAQ. But the thing is that because this was driven, I mean, yesterday's moves were driven by Donald Trump's tweets,
Mhm.
that it's insane, right? I mean, it's amazing. But at the same time, as traders, I see that as a big opportunity. Why? Because I mean, just take a look at the Nasdaq, mate. I was, I mean, this was my area to scale in on my long-term longs on the Nasdaq. I missed this one right here. But yesterday, when Donald Trump tweeted that, yeah, they were not negotiating more anymore. I mean, price hit and stopped my area. I did not enter blindly, but I did wait. I mean, this happened during the Asian session. I waited for these highs to break, and eventually I got ticked in on a scale in on another long on the Nasdaq. I mean, I saw that as an opportunity. Same thing with gold, mate. But gold, let's go to this chart because it's funny. I mean, it's funny how key levels work in the market. I mean, people that or traders that are trying to sell around these levels are going to get crushed because this, I mean, yeah, it looks, I mean, in the short term, this looks very much like a breakout of a bear flag, right, for a continuation lower. But let's be real. I don't think that in such uncertain times, the price of gold is going to drop below 1840, for example, or below this zone. This is still very uncertain times, given the fact that we have the US president with coronavirus and spreading it everywhere he goes.
I shouldn't
Someone,
laugh.
I thought it was funny because when he was walking out of the hospital to go back to the White House, a reporter asked him if he considered himself the great spreader.
Is that real? Wow. Okay.
Yeah, it is real, mate.
That's a bit cheeky.
Yeah, he didn't respond, but it is real. I saw the footage. That was funny. Yeah, so we have very uncertain times ahead of us with with the U.S. election, this president that's currently in power in the United States. This next U.S. election is going to be a very, very big deal. And until we get resolved if Biden or Trump is going to be
Hello. We just lost Orlando by the sound of that. You with us, mate, or not? Let me see if he's still in the room. It would appear that he's dropped out. Okay, he's not. Okay, cheers, Angel. All right, let's thank goodness that we found Orlando, but now we've lost him again. It's a bad internet connection that he battles with most often in El Salvador, and very, very frustrating for him, I'm sure. How he trades, I've got no idea. I hope he's got a VPN so that his trades stick, because he's always dropping out all over the place. Anyway, let's proceed. In fact, we're right at the top of the hour, so we won't be hanging in here too much longer. I don't have any trades at the moment that I'm looking at other than the ones that I have shown you. As Orlando said, that yen move has now taken us out of dollar yen, and I think it once again goes back into my sacked list because I cannot get this right. Dollar yen. I've had a few wins on it, but honestly, we've had probably just as many losses on dollar yen. So let's put it back in the kit bag and let it retire it again. So what has happened with the yen? It has tumbled by the looks of things. And
Sorry, mate. My computer died.
There he is.
But I'm back.
Your computer died.
I mean, yeah, my battery, the battery on my laptop is, I mean, it needs to be plugged the entire time, and I forgot to plug it when I, when I went on the show.
Oh, I thought you lost the internet again.
Back, no worries. Do your thing, and I'll just take it back from where I left when you're done.
Yeah, okay, mate. I'm just having a quick look around to see if there's anything that I can trade. But at the moment, with that topsy-turvy stuff that's going on, I think I'm just waiting for the tops of the ranges to be hit or the bottom of the ranges to be hit before I trade again. So nothing at the moment. This one really gives me the SH1Ts as well. Pound Kiwi. I'm trying to get into this long again, but it refuses to give me what I need to see. And maybe I have to take a different tack with this. Maybe I'll have to look at the break and retest. It's not my preferred option, but if that were to break and retest here, maybe we can play an ABC long, taking profit before we hit that level. We'll see. I don't want to trade it right now, I must say, but we'll catch up with that a little bit later. The Euro CAD, I'm still interested in that. Let's see if that's done anything. Euro CAD, I turned that into the S&P, didn't I? No, there we are. Okay. So let's just extend that range a little bit, and we can probably even put an inner range into that now on an hourly chart. Let's do that because we do have something there that looks interesting. That doesn't look interesting, and nor does this at the moment. But if we can come back to the top of here again, or even to the top of here, get back inside and give us the lower high, that again would constitute a false break. And I'm still keen that this little rabbit is here is still holding sway. So I'm keen to take advantage of that. So let's have a look at this area here. If we can get back below it and retest it, then we'll get into a EuroCAD short for, I think, the 9th time in the last few weeks. Just keeps giving us TP1 and nothing more, which is a bit of a bugger up. But that's happening a lot, and it's happened again by the look of it today with Kiwi yen that we are in. For all intents and purposes, it looked as though Kiwi yen was off to the races. Now I can't even find it. Where is it? Maybe there it is. Look, for all intents and purposes, though, Kiwi yen was off to the races. Broke below the weekly pivot. Again, this was Donald Trump, but the market's gone straight back, as you were just talking about, Orlando.
Yeah.
Opportunity down here for you. I wanted to go the other way, of course. We'll see what happens. But this is what Donald Trump does. He does produce bungee cords. And you've taken advantage of that, you're telling us. So let's continue on with you. I've got nothing to trade at the moment.
All right, all right. So yeah, let's continue. So we're talking about gold, right? And I was talking about the reality of the U.S. economy and well, the worldwide economy. Very uncertain times, even though we are. Well, let's talk about coronavirus first, mate. I mean, and the reason that I'm talking about all of this uh, is because of this simple breakout that looks like a breakout of a bear flag. But I mean, if you're going to be trading just technicals in such fundamentally driven markets, you better not, right? Because the thing about it is that I don't believe that we are going to be seeing lower prices in gold. Why? Gold and silver are hedges against uncertainty, right? The markets hate uncertainty. So when the risk is off, um, when the risk is off, we suddenly see an afflux of capital leaving equities for more safe bets or more safe markets like gold, right? And right now, and that is why we saw this big spike in gold from the low 1500s, to all-time highs at around 2080. Okay. And if you notice, I mean, the pullback right here was about 10% or 11%, right? And if we're talking about the last leg up in gold from these lows to this high, that was a 42%, 43% move. So this is indeed just a pullback in the bullish momentum that is fundamentally driving this market. So coming back to risk is off, right? And the uncertainty that times or the uncertain times that we are living, of course, that we are going to see a lot of influx of capital going into more safe bets like gold and leaving equities. Now, the reason that we get in such a rally in equities because of the stimulus that has been released by central banks all over the world. That has nothing to do with the risk being off. And to come back just to look at this flag, I would have never traded that breakout. Donald Trump or not or no Donald Trump, I would have never taken that long because I'm looking for longs in this market, right? And I actually took this long yesterday, and I got stopped out at break even. I think I don't remember. I think so because I am looking for. I mean, I'm looking to get long, and this long yesterday might have been a little too aggressive in my opinion because we were very close to that level. That level being that level that was supporting. Um, Price before the or after the all-time high that eventually got broken with, and right now we are retesting in what seems to be a bearish flag. Now this is just my analysis. I might be very wrong, but this is what I'm looking for. So when I saw that dip yesterday, if we go to the 50-minute chart, let's go to a 50-minute chart, right? I saw that dip yesterday, and my validation level was this level right here, the 1881, right? And actually, I'm going to go to the 1 hour chart because I want to show you the candle that prompted me to get into this long in gold, and was this one right here, this hourly candle. Pretty, I mean, very bullish if you ask me. I mean, just by looking at this candle at this level, and the other reason that this level was very important for me is because this is the level that we had the double bottom breakout before a rally back to the broken level. So that was to me a retest of an important level, which could be considered as a key level too, given the fact that it was tested here before we broke it to the downside, then retested twice before we actually broke to the upside, pick up buyers, and then continued. So yeah, this level was important to me. And when I saw that candle, that prompted me to put my buy stops above the previous high. Now, the thing about this particular trade is this level right here. The between and I mean to the pip. I mean, we got there to the pip, and this should have been my TP1, but I'm managing this trade differently, right? Because I'm not looking at this as a flag, right? I'm not looking at this as a flag. I'm looking at the whole bearish structure as a flag, okay? So what I'm looking as a flag is this structure right here. So in my mind, I got in at a very good price for a possible breakout and a bullish continuation here, right? So that's why I didn't want to take profits right here, because I'm looking at the long-term game, right? And this, I mean, this has been a very powerful move in the last couple of hours in gold. I mean, from my entry to the highs, this is about a 88 0.88% move, which is quite strong in my mind, right? So how am I going to be managing that trade? Well, if definitely we get bounced back down, I will be taken out at break even, which is fine. I will be looking for more opportunities to buy. And if we move past this, the 18 or 19, 1898 or 19 level, which is, I mean, just look at how thick this level is. Right now, I cannot show you the volume profile on this chart because I have to. Well, I changed my my cards, and I have to change it on my actually right there on my.
Didn't pay your bill, did you?
No, I didn't, because I didn't pay my bill because my card, I mean, my card expired, and I just got the new one.
Yeah.
So yeah, so I've been trading with only one chart. I mean, I can't use the normal layout of 6 charts that I normally use, and I can't use the volume profile on some indicators. So after the show, I'm gonna manage that. I'm gonna arrange that. But the thing is that this is a thick zone, right? Just looking at the wicks of these candles, and yeah, how just by looking at these candles right here, this ones and this ones, you can see.
Looks like we've lost him again. It can't be power this time. What is it? I don't know. But it looks like we've lost Orlando. Guys, you can catch up with Orlando a little bit later in the day. He has a show at 7 o'clock. No, that's you, Shukri, at 7 o'clock. I think he must follow you at 7:45 maybe. So coming up, guys, those of you who are in for the first time, again, welcome. Oh, he's back.
Yeah, now that one, and now what it was that was my internet connection, mate, not my battery. But just to finish up with this, I mean, this is pretty thick. You can see just by looking at the candles and the wicks that it is a thick zone that heavy volume has been trading in. If we manage to go to the upside and test that 1914 level, I will be taking some of it off. Just because this is such a massive level, right? And my trade would be nice profits. But if in fact we get a break and retest of this level, I would definitely be looking for another buying opportunity, just like the one that we got here. You know, just looking at a rejection candle and possibly break of the highs to get in on a scale in on this trade, because I'm still pretty much bullish in gold, you know, in metals all over.
Yep. For good reason. I can totally get with that. I love the 3 little Indians that are sitting there, and they did it once again, break to the downside. Magic. You know my 3 little Indians?
No, I'm a 3 little Indians. I mean, what is the pattern of the 3 little Indians?
Well, my pattern, I don't know if it's the pattern, but my little
Ah,
three.
go ahead, tell me, because I didn't know. I mean, I didn't know that.
Okay, the last three swing highs.
Oh, this.
Yep. Every one of
Yeah,
them's false.
that's a pretty slam dunk short for me too. I mean, yeah, I mean, I do trade that exact pattern. And I mean, and I can bet you all the money in the world
Oh,
that we
this
have
is
some
aggressive.
bearish
All the money in the world.
divergence here.
Oh,
Let's
okay.
let's see it. Yes, we did have some heavy bearish divergence. I mean, that was a slam dunk technical short there. I mean, Trump or no Trump, uh,
Yeah, look, all
price
the
was
same.
looking heavy here.
Yeah, it's one of my faves. I like it, especially if it's
Yeah, and where would
breaking
you
out
enter
a range.
this?
I'd have to wait for setup. I'd have to have a lower high off the third one, or I'd have to have a break of a trade line or something of that.
Yeah, I mean, my setup would have been, let's see it, because that's actually interesting. This is too late for me. I would have actually
Yeah, you
gotten
missed it, man.
in at the break of this low.
Yeah, you
Definitely
trade
at the break
levels,
of
don't
this
you?
low. Yeah, I do trade levels. I would have, and just look at this. We had the breakout and then the
The retest bar.
retest.
Yep, that's
Yeah,
what you.
yeah, I mean, I mean, if for some people trading with buy stops or sell stops in this case is too aggressive, that I mean, that was a clear retest before price dropped. Yeah, I mean, I didn't see that one yesterday. It was very, I mean, I was so tired during the New York session, late New York session, that I just put my stops at break even and went to bed because I mean, I have been up since 1 a.m. And that is some, I mean, that is some of uh, some of the bad sides of being a night trader.
Yeah, exactly, mate. Thank you for that. The people can catch up with you at 7:45, which is
Yes.
what 3 hours away, 3.5 hours away.
Yeah, it's about no 3.5 hours away.
Yeah.
I'll be in there with Lloyd. If you want to
Okay,
join,
Lloyd's coming
guys.
in. There. If you want to join, all you got to do is stay on this channel, right?
Yeah, that's it. That's it. All you need to do is subscribe and click that notification bell to get notified whenever we go live.
There you go. And that is about 3 hours away. But before that, if you want to stay on the same channel, my goodness me, there's so much going on here.
Yeah.
We've got Shukri. And
Yeah.
Shukri will rock the socks off you with his crypto stuff.
Yeah,
Question.
he will. He will definitely. He is very good. I mean, I've never. I mean, and the way that he explains things, it makes it sound so easy, right? And so simple.
Not happy days trading, Helen. No, I didn't. I haven't had a great day myself. Well, I'm kind of break even-ish because the dollar yen took me out, and Kiwi yen has still kept me alive at this point. We'll see how that pans out for the rest of the day. Aussie Swissy, very quick. Have you got an Aussie Swissy chart there, mate?
I do. You want the chart? Aussie Swissy?
Yep, very briefly. Sino wants to know my thoughts on Aussie Swissy. My thoughts on Aussie Swissy are very, very mixed, I've got to say.
You want the daily chart?
Daily chart's a good start, but if you stick with that chart,
yeah,
that's all good. Just go a bit wider. What are all those little stars you got there?
That's weekly highs, lows, monthly high lows.
Okay, got it.
Yeah.
So that's telling you, that chart there is telling you that we've been in a range since June, and we are coming at the moment off the bottom of that range. For mine, I've got to respect that at this point, and I'll be looking for a higher low on a smaller time frame to trade it, probably back to the top of the range. So that's what I'd be thinking. If you got the 4-hour chart there now, mate.
Yeah, for sure, mate.
Okay, so the 4-hour chart is telling me that we have got a higher low off that baseline,
Mhm.
and I'd be looking for another pullback, maybe on the smaller time frames, to get into a long. That's what I'm looking at the moment. So the hourly chart may even give us that.
Yeah, here we go. That's the hourly.
No, it doesn't give me that at the moment.
No, just a pullback like this, and then
Yep,
a continuation.
that's what I'm looking for. And
Yeah,
you may
because
even find that you've got an inverted head and shoulders there, if that were to be the case.
yeah, right here, right? We might get that pullback,
Mm,
and with the neckline right here.
yep. So that's pretty much where I'm at, Sino, with you. How about you, Big O?
Yeah, I mean that's a great catch on the Aussie Swiss, but sadly I do not trade these markets.
Now, the
Um,
interesting part is if we have gone risk on, which the yen crashing would suggest that we may well have done, the Swissy may well follow that. And
yeah,
therefore, Aussie Swissy may indeed be a reasonable path to track. May well, but I wouldn't be just jumping in. I'd be waiting for that setup. So the higher low is
yeah,
important.
definitely.
All right, buddy. Thank you for that. Much appreciated.
Thank you for having me, mate. I had a great time.
We'll be catching you each and every Wednesday at this time, yeah?
Yeah, at this time I'll be here every Wednesday at this time.
At 1 a.m. My goodness gracious me. Okay. That's when I finish tonight at the US session. Of course, guys. So there you go. There's three things coming up. If you're in the YouTube shows, we've got Shukri at 7. We've got Orlando at 7:45, and you've got myself. I'm not sure who's dropping in with me at 8:30, and that will go through to US Open and half hour into that, and then of course I will be going to bed. Let's see if we can find some good trades for you guys in one or all three of those shows. So not happy days, Helen. Never mind. Happy days coming up, I'm sure. Have a great rest of Hump Day, guys. Thanks, Big O, and we'll catch up with you a little bit later.
Thank you, Jeff. See you later, man.
And one and all, we'll see you in one of those three shows. Have a great, as I say, rest of Hump Day. Bye-bye for
Cheers.
now.